Standard disclosure, this video is for education purpose only. We are not SEBI registered advisor. Investment in stock market are subject to market risk. Invest at your own risk. Nifty just gave its worst weekly performance in 3 months. FIIs are selling hard. Charts are breaking down. So the big question is, are we heading for a deeper fall or surprise bounce on Monday? Watch this video till the end because I will show you exact levels, what big players are doing, and where smart money is positioning for January 12th. If we look on the daily time frame, on Friday, January 9th, Nifty closed near 25,683 after falling almost 200 points. This is now 5 consecutive red candles, something we haven't seen in months. So clearly, sellers are in control, confidence is shaking, and volatility is back in the market. We will try to understand the market movement based on below 6 factors: price action, technical analysis, option open interest, institutional position and activity, financial astrology, and financial news. Price action. What is price telling us? Let's start with pure price action, no indicators, just raw market behavior. We are looking at the 15 minutes time zone. Market opened positive, but selling started immediately and it could not cross or sustain 25,900. Lower highs and lower lows, classic bearish structure. It broke 25,900 and never recovered. Heavy volume on down moves, that means big players are exiting. So what does this mean? Institutions are distributing stocks, not buying dips. And if we look at daily time frame, as we have mentioned, fifth straight fall, breakdown from the earlier strong zone of 26,500 to 26,000. Market right now is in short term downtrend channel. If Nifty breaks 25,600, the next stop could be seen at 25,450, and if this support is taken out, the next stop can be between 25,000 to 25,100. So price action tells stay cautious. Technical analysis, what indicator says. Now let's bring in indicators. RSI is falling, that means momentum is weak. MACD has provided the bearish crossover, and now the price is trading way below 50-day moving average. That means the trend is turning negatives. So the key levels which comes out are 25,600, which is the first support. Next support would be in the zone of 25,450 to 24,000, 25,400. Resistance, the first resistance is placed as 25,900 and the next one is 26,000, which is a stronger resistance. Unless Nifty crosses 26,000 decisively, every rise can be a selling opportunity. Options data. Now let's try to understand what option data is suggesting. First, what changed last Friday? We can see from the change perspective, there has been huge call writing happened starting from 25,700, 25,800, 900, and even at 26,000 levels. That means sellers were aggressive in writing calls and they were not expecting any major bounce in the market at this point of time. From the current option interest open position perspective, there is a huge call writing open interest at 26,000 level, followed by 25,900 and 25,800. That means these levels are going to act as major resistance. And from the put writing perspective, the only significant put writing happened or the open interest is at 25,500 levels, which means if we continuously trade below 25,700, then we can see increase in the selling pressure, which might put index or pull index to 25,600 or 25,500 levels. On the contrary, if we see the put call ratio, it is 0.5, which is slightly on the oversold zone, which might be a reason to small bounces, but those can be used as an opportunity to institutional activity. Now, the real game of big players. FIs have sold 3,800 in cash on Friday, and against that, DIs have bought 5,600 crores in cash market. So that means FIs are continuously selling and DIs are pausing the fall in the market or pausing the crash at this point of time. From the pro traders perspective, if we look at the option open interest, pro traders are still on the sell side for the call and the buy side for the put options, and retail traders are on the long side still. We have seen some unwinding in the calls from the retailers on Friday as expected, and on the put side they are still on the aggressive sale side. So that means if retailers have to make money here, market has to rebound at least till 25,900 or 26,000 level, which is of low probability considering the current trend and the data. One thing you should always remember and note down, that FIs controls the trends in the Indian stock market. How much ever is the retail or the domestic participations strength are, but the trend is controlled by FIs, and DIs only slow down the fall or the slow down that trend. Financial astrology. Now, for those who follow astrology, key transits on January 12 is Mercury in Capricorn square Saturn, suggesting caution and delays. Venus in Aquarius opposes Mars, indicating volatility, and Moon in Virgo trines with Jupiter, potentially aiding a minor rebound. Some astrologers are forecasting explosive moves in gold and silver spilling to equities, with Nifty facing turbulence but Jupiter supporting limiting falls. If we compare similar aspects or transits in past, in January 22, we saw Mercury squares with Saturn, which saw a drop of 3 to 5% amid global jitters. But again, this is not a single day fall, this is for multiple days. And in 2019, Venus and Mars opposition led choppy but flat markets. So astrologically, market is supposed to be neutral to mildly positive with rebounds, but stay cautious as this cannot be a primary driver. Now let's understand the news and what's hurting the market. Key important developments which are going to affect market this week is first the rising tensions in Iran, which would have a great impact or huge impact on the oil prices if the tension escalates and Iran retaliates. Second is, which is specifically affecting Indian stock market, is the US tariff threats and global uncertainty. And third is FIIs is pulling out money from the Indian stock market. But from the positive perspective, we do have right now at this point of time falling crude oil prices and weaker dollar, which is stabilizing or reducing the flow or the intensity of the flow out of the Indian stock market at this point of time. One major development is going to be the release of the CPI inflation data in India. The expected is 5.5 as compared to earlier 5.1%. Anything which is more uh, than 5.5 would trigger more sell off in the market, and if there is any positive surprise, we might see a good short recovery in the stock market.